Welcome to Long-Term Investing 1.0. Let's dive right into it. So if you want to be a long-term investor, this module is specifically for you. What is long-term investing? Long-term investing is a great way to let your money work for you over an extended period of time. And it will allow you to avoid the pressure of having to be right about the market direction each and every day. So if you're going to be a scalp trader, you have to be correct about market direction each and every day, because you're going to be hopping in the market, hopping back out, jumping back in, and jumping back out, all in the same trading day. So, but as a long-term investor, let's say you have your option contract and you have an expiration date that's 10 months away or even a year out. So right now, it's 2024. I can buy, let's say, Tesla call options for an expiration date in 2025. So I've got a whole year to let this option play work in my favor. But as a scalp trader, you're in and out throughout the day. So you have to be right about the market direction. But as a long-term investor, you just have to get in at the best price possible. That's still important, to be able to read the chart and get in at the best price. But you don't have to watch the market each and every single day. All right, so I just want to make that clear. Here we have a chart for Apple. Now this is TD Ameritrade's platform. But whatever broker that you choose, you're going to be able to go to the option chain. So this is where you're going to find the options. So I want to just go back over this again for anybody who didn't understand or they want to see it again. You log in, you find the company. Right here we have Apple, and then you go to the options chain. Now you'll see expiration dates. So you've seen this page before in the previous module. But today is Thursday, January 18th, 2024. And then over here are all of your expiration dates. So up here, 1 day until expiration, 8 days, 15 days. This isn't considered long-term investing. I have this highlighted because you got 92 days, that's 3 months, 120 days, all the way up to 365 days, a whole year until expiration, 729 days until expiration. So when you go and buy these contracts with expiration dates with this kind of time, this is long-term investing because you have a lot of time for the play to work in your favor. All right, so this page here. So let's look at an example. We've got 185, the 185 calls right here for Apple. And as you remember, we always buy the what? The ask price. You're right. So 1140 is the ask price for one Apple contract that expires on April 19th. So this one contract would cost $1,140 because we multiply this by 100 since it's one contract. If you wanted 2 contracts, you would multiply this times 200. So this is 92 days until expiration. Now, let's go down here a little further. If we wanted 882 days until expiration for the same 185 calls, now look at the ask price. It's a lot more. So it's $40.50. But for one contract, it's times 100. So one contract with an 882 day expiration will cost you $4,050 for one contract. So it's the same 185 calls. The only difference is the time you have to own the contract. Again, the more time you have, the more expensive it'll be. So again, up here we have 92 days until expiration. That's 3 months. It'll cost you $1,140. But if you want it 882 days until expiration, it'll cost you $4,050 for one contract. All right, so that's the same thing for putts. Over here, we've got the 185 putts. The ask price is $5.50. So for one contract, we're going to multiply this by 100, and we get $550 for one contract, 92 days until expiration. But if we want 882 days until expiration for these 185 putt contracts, then look at the price, a lot more, $19.95. So we multiply that times 100 and we get $1,995 for one contract. The more time you have, the more the contracts will cost you. That's because you have more time for the play to work in your favor, the more time to make more money. Okay? Now, next I have a video for you, and I will be right back. All right, so let's take a look at Apple. Now, we're gonna start from that 2-year chart. So let's go here, 2022, let's make that 12. All right, so now we're gonna get a 2-year view on Apple right here. Let's get rid of that. Get rid of that. Okay. Okay, so on this chart, all you have is volume bars. 2-year view of Apple. Okay, so let's look for any type of support or resistance. And let's see, we have a touch here. Let's see if we got anything else more solid. Okay, here we have. Okay, so on this chart, on the 2-year view, I'm looking up here at resistance. So let's mark the zone here. So we're gonna like this peak, this wick, and this wick. Let's just try to get both of these wicks in the zone. Right across like that. Straight across. Okay. So now we can go a little further down just to get some more of that. And right there is perfect. Okay, we got a zone here that is possible. Let's make this red. Let's just change that to red. Okay, so I'm seeing that, but I'm not seeing anything else that, well, you know, we can mark a level here at 176. We have a touch here, pretty strong rejection. Then we have a touch here. Let's look over to the right a bit more. Okay, so this 2-year view, we can go ahead and mark this zone. And we'll just go from here and we'll go straight across. Right about there. We'll make this blue. Okay, so on our 2-year, we drew 2 zones. Let's drop down to the 1 year. Okay, drop down to the 1 year. Okay, I don't see anything too much going on the 1 year. So now we're gonna drop to the 3-month. 3-month view on Apple. Right now, I am seeing some touches here that line up, and they line up with these touches right here. So let's make a zone from the top of these wicks, right about there, and we're gonna take it straight across. Right over here, get that in. Okay. All right. Let's make this one yellow. All right, so we have 3 zones drawn right now. Nothing else, nothing else. All right, let's drop to the 1 week. 1 week, 1 week. Let me erase this. Erase, erase, erase. 1 week, nothing to speak of really on the 1 week. Now let's go to the daily. All right, daily chart. Let's zoom out. Let's see what we have going on the daily. So we have our zones here, here. All right, so let's look for any type of supply or demand zones with volume. So we know that Apple, let's look for big time volume. So a lot of volume came in here and the price got bought back to the upside. So it came down here, went back up. A lot of strong volume here. And let's go to the left more. We had a bunch of volume down here as well. So basically 2 significant pushes to the upside. 1 here and went up, and then 1 here and then rose to the upside. So we're gonna make 2 more zones. And for demand zones, we take the red candle before the push to the upside. That's gonna be this candle here. All right, let's make a zone from the top of its wick to the bottom of the wick of this red candle right here, and we take it to the right. All right, we can just make this one, make that orange. And then this lower level, before the advance started, I would say the volume really came in right here is when the volume really came in strong. So let's mark this one here, this candle. The top of the wick of that red candle to the bottom of the base, and we take it to the right. And let's just make that one, let's pick this color right here. Okay. So now we have 5 zones marked. We're currently right here with Apple. Let's get all the zones in here. Let's see. Okay. Push that up. Okay, here we go. So now we're right here. We're right here in the 185 zone. So to get back into Apple, I'm looking for volume, and I'm looking for it to come down into one of these zones. So if we break this zone here, I'm looking for the next level to see what happens when it gets to this zone. If it breaks this zone, then I'm looking for the response when it gets to this orange zone. Now when it gets here, it may bounce back to the upside. But if it breaks this zone, then I'm looking for price action to come down here into the 136, 137 zone. This is the 167, 170-ish, 166 zone. So this is from 165 to 170. So we want to see if we get some strong volume like this coming in at either one of these levels. That's when we're gonna get back into Apple for calls, and we're gonna go long-term investing. So we have to wait. We don't get back into Apple until we see strong volume, such as this here and this here. We have to see that first, okay? So that's how I would approach Apple right now. We're at 185.92. That's the last close. But I would not get back into it until it came into these zones. And again, we go long. We want to go 3. Apple, you want to go maybe at least 6 months. I go at least 6 months, 9 months to a year out for those call option contracts. All right, catch you on the next video. Oh, by the way, I almost forgot. Let's add these as well just to have them on here. The 50, the 200, and the 100 moving average. So just so you can see. So now we haven't broken this 200 moving average yet. We're beneath This line here, we're above the 100. But once we break this 200 moving average, then I'd be looking for price action to come back into this zone at least. Comes down here, great. It's a definite buy down here. However, it may just come back to this zone and then pop back up, but we'll see. So we have the chart, well, not the chart, but we have Tesla pulled up. And the same thing, you want to come and find the options chain. You want to find the options chain. And same thing, we want long-term option contracts. So today is Friday, January 19th, 2024. These would be considered long-term expiration dates, starting at 91 days until expiration, going all the way to 728 days until expiration. So we have long-term contracts here. All right, again, the longer the contract, the more it will cost. All right, so we have the $210 calls right here. Expiration 91 days. 2220 for one option contract. That's multiplied times 100 because it's one contract, and that cost would be $2,220. Coming on down here, if we wanted that same $210 call option contract, but 881 days out, look at the price. $71.25 times 100, $7,125 for one Tesla contract expiring in 881 days. Over here on the right, for the put option contracts, the same $210 put option contract that expires in 91 days will cost $17.55. For one contract is times 100, so that gives us a cost of $1,755 for one contract of these $210 Tesla puts. Coming on down here, if you want that same $210 put option contract that expires 881 days out, here's the price, $50.20 times 100, it gives you $5,020 for one $210 put option contract on Tesla. All right, let's jump into a video and I'll be right back. Okay, everybody, so this video is for my long-term investors out there, the people who just don't have time to analyze charts every morning, every day. You have more things to do, you have a job, other businesses, whatever it might be, but you still want to invest in the market. You want to park your money somewhere and let that money grow over time. That's long-term investing when it comes to options trading. And when it comes to options, your option contracts, you're going to be getting at least 3 months on those expiration dates. So you may get 3, 6, 9, 1 year or more for your option contract. So the more time you get, the more time you have for that play or that investment to materialize. All right, so let's talk about how to find great prices to get in to give you the best chance of success. All right, so this here is the chart for Tesla, and I'm using TradingView. That's where I do all of my charting. I love using TradingView. All right, so on this chart now, all you have is volume bars. That's represented down here at the bottom, just volume. But here soon, we're gonna add some things to this chart to give us an idea of where we need to look for our entry. So let's start with top-down analysis. Now, top-down analysis is simply starting from a larger time frame and working your way down to analyze the company or to analyze the price action. What I like to do is start from 2 years, a 2-year view. So we're gonna go back 2 years from today. So we're at January 12th. We're gonna go January 12th, 2022. 2 years ago from today. All right, let's look at this view. So here, what we're looking for on each of these views, each time frame, we're looking for support, resistance, supply, and demand. And you learn about all that in this course. So when you look at this chart, we're looking for multiple touches into one zone. And already my eyes go here. Look at these 2 touches. Let's go across. We got a touch here, kind of a touch right here as well. Touch here, touch here. So we're gonna make a zone. And we're gonna start this. This is my rectangle tool. I'm gonna take this all the way across to cover this zone right here. All right, there we go. All right, now let's just make this zone yellow. So we'll change that color real quick. Okay, so this zone, you see, we had a touch into the zone here, went up. Touch here, went up. Almost a little touch here. Then we have some action here. A touch, back up. Then we were down here and went up to the zone again, rejected. Kind of touched right here as well. And then it came down from here, touched, and then went back to the upside. So let's make this a little taller just to cover everything here. All right, so this is our 2-year view, and we have a zone marked. Nothing else looks interesting here. So we're gonna move down to the next level, which will be our 1-year view. So we'll click that down here. And nothing to speak of here as well. This 2-year view is still holding up pretty good. And the 1 year, I don't see anything that really stands out. Now let's jump down to the 3-month view. All right, now this is the 3-month view, and what do you see? Do you see anything here that lines up? Anything? Well, I hope you see this up here. We have a peak and then a big rejection, and then a peak here, big rejection. So what I'm gonna do here at this point and this point, I'm gonna make another zone. I'm gonna start from the top of these wicks, and I'm gonna go across to cover the top of these wicks. So let's take that straight across, and we make that zone just like that. And we take this across as well. So look at this. Now we have 2 peaks with a big rejection, and our zone is marked. And we're gonna change that color. Let's make this blue. All right, so 3-month zone drawn, 2-year zone drawn. Now let's pop down to the weekly chart. Here's our weekly view. Let's zoom in. All right, now on the weekly chart, I don't see anything that really stands out. You could look at this area here, and this area here, and this area. So let's just draw a zone that will encompass these wicks and these wicks also. So we'll just start up here, draw a zone. Let's go down, let's go across, just like that. So now we have this wick, these wicks, and this wick in this zone. And every time it touched, price action went to the downside. So let's change this color to red. All right, so we got 3 zones marked now. This is from the 2-year, this is from the 3-month, and this is from the weekly chart. Now we're gonna drop down to the daily chart. All right, so this is our daily view. So now what we wanna look for, again, support, resistance, trend lines, supply, demand. And if we zoom out on the daily chart, I'm seeing a possible trend line. Do you see it? If you said it right here, you would be correct. Let's take our line tool, start from the very top here, and go all the way across. All the way. And look at what we have here. We have 1 touch, 2, 3, 4, 5 touches for this upper trend line, which acted as resistance, because every time price action touched this trend line, it went back to the downside. All right, so we got this drawn, and let's zoom in a bit. And we're gonna go ahead and draw a lower trend line because we have 2 points, 1 point, 2 points. Let's include this as well. So we're gonna start from the bottom of this candle here. Take that line tool, drag it straight across. So now we have these 2 points covered. So we have an upper trend line that acts as resistance, and then a lower trend line. We can take this back here a bit. A lower trend line that has acted as support. Every time it touched it, it popped back up. 1 time here, the 2nd time here. So now what we're gonna look for is supply and demand. Where did the stock really advance, and where did that start? Well, the first thing I'm seeing is right here. This is a huge advance from here all the way up here. So for demand, we're looking for a demand zone where buyers want to step in to push the price up. That's demand. Remember, supply is at the top where people are looking to sell to push the stock down, and demand zones are where buyers are waiting to buy the stock back up and push those prices to the upside. So volume needs to correspond with the move. And even though the push sort of began here, look down here, you don't really see strong volume and strong consecutive volume. But once we get here, let's look down here, strong volume, and then prices shot up. Now, the candle before, let's raise this up a bit. The candle before all of this volume started would be this candle right here, this small red candle. Let's draw a zone covering that small red candle from the top of its wick to the bottom of its wick, right about there. Let's drag this straight across as well. Now this is a zone of 165, 168. Currently, price is right here at 218, 219. So now, what am I looking for? Well, let's take this across more. So the 2 zones that I drew, now these are above price action, this zone and this zone. So currently, we're not paying a lot of attention to these 2 since price action is heading to the downside, but we keep these on our chart. We have to draw all of our zones in all the time. But since we're coming down, we're approaching this zone and the bottom trend line as well. So what I'm looking to see is are we gonna break this zone and go down further? If we do, now I'm looking forward to coming to this red zone and or touch the bottom trend line before I get back in to buy calls for the price action to go back to the upside. And the volume needs to confirm the move. Okay, so let's just go back even more. Now price actions went very high from this point as well, from here all the way up. So let's draw this just in case, because before the big advance, I would say this here was when the volume really came in. So we're gonna draw a box from the red candle that preceded the advance, this one right here, top to the bottom of that red candle, bottom to the top, and let's take that straight across. So mind you, now these zones may not be reached, but we always want to mark them. Let's just make this one purple. All right. So we look at everything. We have a few zones marked. How far down will Tesla go is the question. Now, will it come all the way down to this 120 zone? Well, possibly. Will it come down to this 165 zone? Possibly. But we will not get back in Tesla for calls until we see strong volume that corresponds to one of these three zones. And this trend line is important as well. All right, so now let me also indicators. Now for long-term investing, I always use moving averages. So my 200 moving average, let's add that. Let's add the 100-day moving average. Okay. And let's add the 50-day moving average. All right, so I'm not going to add, so on my 5-minute chart, I use my 8 and my 21 moving average. I'm not going to look at those when it comes to long-term investing. I want more days, so 50 days. The last 50 days, the last 200 days, the last 100 days. We want to see that on the chart. And then on TradingView, to add these or any other indicators, all you're doing is going up to the indicators tab and you're typing in moving average, exponential. And you add these. And once you add your moving averages, then they're gonna appear right here. And just drop down and you can turn them off and turn them on. All right, so you wanna see these on your chart. You can change the color as well with these. But this 200 moving average is a pretty strong one. So when price action broke down below this 200 moving average, we knew that price action was headed to the downside. All right, so just wanted to go over that really quick on what to look for: supply, demand, support, resistance, and start with a top-down analysis. Start 2 years, go to 1 year, go down to 3 months, again, then go down to your weekly and then your daily, and mark your levels and mark your zones. And you'll have an idea of where the price may come down to before you enter, okay? But just remember this, volume must confirm. So we're gonna let this price drop. You see all this red volume here? That's pulling the price down. So we do not jump back in until we have significant green volume like this right here come back into the picture. Then we get back in. All right, so we have some long-term tips. When analyzing a stock to invest in, you should always try to identify a chart pattern on the daily time frame. This will increase your chances of having a winning investment. Mark the prime entry point on your chart and be willing to wait, patience, for the price to reach that level. Even if it takes weeks or even months, wait. The market rewards patience. After the stock runs up in price, don't chase it. This means that you don't want to buy after news is released or on any kind of hype. Never jump in after hype. So usually by the time good news comes out, it's already too late. All right, so by doing that, when you chase the news and chase hype, that's when you typically will lose money. Next, I've got 2 videos for you, and I'll be right back afterwards. Identifying chart patterns on the daily chart is a great place to start when you're looking to invest long-term on a stock. All right, so you can also look at the weekly or the monthly chart as well, but the daily is a really good place to start. All right, so each candle represents 1 day. This red line is my 50 moving average, this is my 100 moving average, and this is my 200 moving average. All right, so chart patterns on the daily chart. What do we have here? Well, if you recall in the previous module, we talked about a double bottom. That's what we have right here, a double bottom. Now we had a touch on the 200 moving average here, price increased, then it came back down for another touch, and price increased. So this 200 moving average acted as a level, or acted as support. All right, we had two bounces. We have a double bottom that formed, and then of course this is your neckline. All right, so when price broke the neckline, this candle closed above the neckline, and let's go down here to volume. Volume was also increasing. So this would be a solid, or would have been a solid play to get into. You could have bought call option contracts, and you could have, now this was back in November, so let's say you would have gotten, let's say 3 months. So you would have gotten call option contracts with like a February expiration. All right, so right now we're at the end of January. But as you can see, price went from this 240 zone up here to now 270. So you got a $30 increase, and you could have bought some call option contracts, and you would have just made more and more money as time went on, right? So now you may ask yourself, like, well, how do I know when to take profit? How long should I stay in? Well, remember what we talked about. We always want to look in the past and see what the stock did previously. So now let's zoom out. Let's zoom all the way out. All right, and if we go back, we want to try to see what levels are showing. And right here, you see this level? It came up and then it went all the way down. Now this was back in 2021. This is 2 years ago. And it reached this level. So what we would have done, we would have went in and drawn a line at that level. All right, so we would have made a note there. And then if we had taken this play here, if we had taken this entry, we would have looked to possibly close our position at this level, at the 250 zone, because what happened before in the past, it reached this level and then went to the downside. So had you taken this position here for call option contracts, you would have looked to close your position here. But let me also say this, you could have taken profit here. However, you also could have waited to see what was going to happen. Like, would it break this level and continue? And as you can see, for about 2 weeks, it went sideways. So it really didn't go up a lot. It didn't go down. So you could have stayed in this play until it started to go down. And maybe if you saw a candle close below this candle here, then you could have closed your position out like right around here. So you could have set a stop loss right about here. So if you had a candle that closed right here at that 249 level, then it would have taken you out of the play and you would have still made profit. But you also, like I said, can stay in to see what happens. And as you see, the price went up another $20. But this just gives you an idea of, if you wanted to just play it safe and take your money, you can always look to close out your position at your first profit target. And that would have been here, this 252 level. So just want to talk about that. And also, now we're at a high, like an all-time high. Let's zoom out. 270 we're at right now. So you see, if you go all the way back 10 years, Visa never reached the level it's at now. And some new traders, what they would do is they would buy right now. So this would be buying high. You don't want to buy high. You want to buy low and sell high. So that's also something you always want to take into account. When a stock reaches an all-time high, do not buy. You want to wait for some kind of pullback. So if you wanted to invest in Visa, you want to see if it's going to come back down, possibly to this level, and then you jump in for the ride back to the upside. That's also something to be aware of. Don't get excited when the stock starts to run. Wait for the pullback before you enter. So let's take a look at Bank of America. And what do we have here? Another double bottom. But this time, it's not at the 200 moving average. It just formed here at the bottom of the chart. So you could have drawn a line across right about there. So we had a touch here, back to the upside. Came back down again. It broke through a bit, but you would have waited. Once you saw this candle form here, it was basically confirmed the double bottom. So you're not gonna know until the second valley forms and we start to increase in price. Once you see this candle form, then you can say it's a double bottom. And then even more confirmation will be, let's draw our neckline right here. Once you saw the neckline, which is right here, this line, you saw that we had a breakthrough, a gap up actually. So we went from what's 2760 to 28 and some change. All right, and down here, what happened? Volume increased. We had high volume here. It broke the neckline. Now we did get a pullback. We got a slight pullback, and then we went to the upside. All right, so double bottoms, double tops, you'll see these chart patterns very often. So be on the lookout for them, because when you catch them, you can make some nice profits. All right, so let's talk about exchange traded funds, ETFs. They are a basket of stocks that trade on an exchange. They move just like a regular stock throughout the day. However, they are not as volatile as a regular stock. You can buy common shares or the option contract on ETFs. Every company in the stock market, every company falls into a particular sector, and every sector has its own ETF. Again, when you put your money into an ETF, you are investing in multiple companies at one time, not just one company. So look below here, we have the ETF symbols and the sectors associated with each symbol. So XLK is the technology sector. XLC is the communication sector. XLY, the consumer discretionary sector. And it goes so on and so on. XLV, the healthcare sector. XLF is the financial sector. XLRE is the real estate sector. So again, when you put your money into the ETF, your money is spread out over multiple companies. That's what makes them less volatile. And somebody made a good point before. Let's say you want to invest in real estate and you don't own any land, any homes, any buildings. You don't have anything like that, but you want to invest in real estate. Well, you can invest in real estate through the stock market. Yes, you can invest in real estate through the stock market by putting your money into XLRE, because that is the real estate ETF. So let's take a look at a few of these. So the first one we have here is the technology sector ETF, XLK. We see the price here is $203.25 per share if you want the shares. But you see right here, you have the ability to buy the option contracts as well on this XLK ETF. Top 10 holdings: Microsoft, Apple, Broadcom, Nvidia, Adobe, Salesforce, AMD. When you put your money into XLK, you are investing in all of these companies. So let's just say, for example, we know it's not going to happen, but let's say Apple just drops down by $20 per share. Apple stock just drops. Well, your investment is not going to be greatly impacted because Microsoft, Broadcom, Nvidia, Adobe, and all of these companies are involved in your investment as well. So they're all stable, or going up, just because Apple went down, it's not going to pull down your investment. So that's what makes the ETF investment a lot safer than putting your money into just one company. All right. The real estate ETF, XLRE, currently is at $38.14 per share. And as you see here, you can buy the option contracts on this as well. Here are the companies, the top 10 holdings. You've got Public Storage, Well Tower, Crown Castle, Simon Property Group. I believe Simon Property Group, they own a lot of mall properties in the United States. So you can put your money into this ETF, and at that point, once you do, guess what? You own real estate. Yes, you are an owner because you own the ETF XLRE. So that may be the shares or that may be the option contracts. So it's a way to get into real estate without having to actually buy brick and mortar properties or land. Moving right along, consumer discretionary. This ETF is XLY. Currently, it's trading at $173.04 per share, but you can also get the option contracts. Top 10 holdings: Amazon, Tesla, McDonald's, Home Depot, Nike, Lowe's. You got Starbucks. So, hey, you can buy XLY, the shares or the option contracts, and your money is invested into all of these top companies. That's what makes ETFs very special. Now you have ETFs that are not sector-based. So these ETFs, they hold a basket of stocks, but all of these companies in these ETFs are not in one sector. So you have sector-based ETFs and non-sector-based ETFs. So what we just looked at were sector-based ETFs. All of the companies in each ETF, they were all in the same sector. But you have, for example, VOO, VYM, the companies that would be in those ETFs, they are from different sectors. All right, so let's take a look. So these are some of our favorite non-sector ETFs. So you got people who they've got $5,000, they've got $10,000, $20,000, and instead of having it in your traditional checking account, and we all know banks don't pay you anything when it comes to interest on your money. They don't pay you anything on your money. So a lot of people feel like, well, hey, if I'm going to have $10,000, $15,000 that is in a bank account, not gaining any interest, why not put it into an ETF where you're making a lot more on it? It's a no-brainer almost. So let's take a look. The Vanguard ETF, that's VOO. Now you can see per share is $445.99 currently, but you can also buy the option contracts on this as well. But look at the companies inside. You've got Apple, Microsoft, Amazon, Google, Meta, Tesla. So these are all very strong companies, and you can buy the option contracts. So if you don't want to pay $445.99 per share, well, you can buy the option contracts on it. You can buy, let's say, a 4-month or a 5-month expiration date, and you will make more money if this goes up, let's say, from $445.99 to $480. So a $40 increase. If it does that in a matter of 3 or 4 months, then you're going to make some pretty good money, especially if you have multiple contracts. We've got VYM, the Vanguard High Dividend Yield Index Fund ETF. So it's currently trading at $111.84. You can also buy the option contracts by clicking on this link here. But look at the companies you have inside: JP Morgan Chase, Broadcom, ExxonMobil, Johnson & Johnson, Home Depot, Procter & Gamble, Chevron. So you can see these are non-sector ETFs because all these companies are not in the same sector. You have financial services, technology, energy, healthcare, all in one ETF. So that's what makes these non-sector based ETFs different from your sector-based ETFs. The Vanguard Growth Index Fund, VUG, currently trading at $322.66 per share. We can also buy the option contracts. And look at the top 10 holdings: Apple, Microsoft, Amazon, Nvidia, Meta, Tesla, Eli Lilly, multiple sectors in one ETF. So these are just things that the long-term investor can take a look at. A lot of people, we're taught to have a savings account and we're taught to have a checking account. That's it. So you've got people again who have a few $1,000, $10,000, $5,000, $20,000, whatever you have, and it's just parked in a checking account, or even worse, parked in the mattress or in the closet at home or something like that. And it's like you have to put your money to work. You can't just have your money. The bank, I'll tell you one thing, the bank is putting your money to work for sure, because they're loaning out your money, charging other people a lot of interest, and they're making money on your money. But your $10,000 or $20,000, you're not making any money by that just sitting in a checking account. And again, even worse, if you have $20,000 in your house in the mattress or buried in the backyard, that's just horrible. You're not making anything. So take a look at ETFs. But again, this concludes Long-Term Investing 1.0.